Fantastic. Thanks very much. Well, thanks for the opportunity to talk about Condor Energies and give you an overview of what we're doing in the company. We've been working in Central Asia now for 18 years, mainly in Kazakhstan. We've recently branched out into Uzbekistan, but been in the region for a long time. Been on the main board of the TSX since 2011. Still the same CEO myself, still the same CFO, and so a lot of the same team over that period of time. For those of you that are familiar with the gold space, the company was founded by the founders of Osisko. So Sean Rusin, John Brzezinski, and Norman Storm founded Condor back in 2006 with the intention of not only focusing on gold, but also having a hedge on oil and gas. So been very active in Kazakhstan over the last 15, 16 years, found some very substantial gas deposits that we later monetized, sold. Same with oil. And so we continue to work. A few years ago, the board took the strategic decision to venture more into the energy transition space. And so we've worked over the last 3-4 years just building up that portfolio, and we're now executing on that. And as part of that portfolio, we have 3 distinct first mover energy transition initiatives. We've got an existing gas field in Uzbekistan that we're currently expanding on, and so we're building that out using proven Western technologies, but we're the first Western company in Kazakhstan to be doing that. We've got a separate project in Kazakhstan right now, modular LNG, and so we'll talk about that in a few minutes. But basically, we're taking natural gas, we're liquefying it, and then we're displacing diesel. The price of diesel, the variation between the price of diesel and natural gas in Central Asia is very large. And so because your feed gas is very inexpensive, you can liquefy it. Even with those costs, you still have a very healthy margin in terms of the cost of diesel. So we're moving forward with that initiative. And the third initiative we have is a lithium brine project. So again, another first in Kazakhstan. Others have focused on hard rock mining for lithium, and we're looking at lithium brine applications. Within these first mover energy transition initiatives, all 3 of them are using proven Western technologies. And so our business model, or our mantra, has really been take ideas that have been proven in Western countries and apply those into regions that haven't used them before. And so that's what we're doing from a portfolio standpoint. Over the past couple of years, we've seen a nice appreciation in our share price, especially now that we're cash flow positive with our activities going on in Kazakhstan, or in Uzbekistan, excuse me. And so we're seeing that continued growth trend. 57 million shares in the company. We've only ever done one capital raise since our IPO of 2011. That was in 2022, basically $3.5 million. And so we've really focused on maintaining shareholder value through not diluting the company. And we're currently running about $100 million of market capitalization. So with those 3 initiatives, it's nice to look at them from a roadmap standpoint in terms of where we're going and what we're doing. We're currently focused in Uzbekistan, and that's providing stable cash flow for us. And so really giving us the foundational to be able to move forward and actively develop the other 2 initiatives that we have in our portfolio. We're currently producing about 10,000 BOE a day from 8 gas fields. Have a very large well inventory. These fields are anywhere from 13 to 3 years old, and so fairly immature, and yet really starved for Western technologies. And that's what we've been applying there. And Q3 was $19 billion of sales. It will be coming out next quarter, obviously, or next month with our quarterlies. But as a sneak peek, producing 10,000 BOE a day and $19 million in sales. And so really what's happened since we took over these gas fields in March of this year is it's given us that stable platform of cash flow. And we just see a lot of upside there with the technologies we're applying. And we'll talk about that in a few more minutes. Second initiative, it's a couple of years out, is LNG. And when people think about LNG, they think about these large multi-billion-dollar facilities. That's not what we're doing here. These are small scale facilities. And so relatively inexpensive, $30 to $50 million to construct per facility. Very mobile and very quick to move around. We've now secured 2 feed gas supplies from the government of Kazakhstan, and that really provides us enough feed gas to generate 1 million liters per day equivalent of diesel fuel. So it'll become very impactful in the very near term. We're talking right now with the National Railway, they'll be the first off taker, but also the marine vessels will be using LNG in place of diesel. And the mining for the mine haul trucks will also be using our LNG. And so it's a very strong business. You can phase it. And so you start out, first plant is about 100,000 gallons a day. And we'll just continue building these modular plants and expanding that environment. The third initiative we have is lithium brine. I realize, the markets aren't really excited about lithium at this point, especially when the commodity price went from $80,000 a ton a few years ago down to $10,000 or $12,000 a ton. We see it more of a long-term play, but really, as we've been in the drilling business in Kazakhstan now 15 years, this is really drilling instead of oil or gas wells. This is drilling water wells and producing that brine. And so currently what we're doing is just really establishing a very strong land position within the lithium world. We expect prices to come back. Small mining companies like Rio Tinto just spent over $6 billion buying a lithium company. And so I think there's a lot of excitement and a midterm 2027 to 2030, you'll start to see lithium prices really come back as demand starts to come back as well. So that's really our roadmap right now, dealing with the gas in Uzbekistan. Again, giving us that stable and that solid foundation for cash flow. We'll be transitioning into the LNG business and both the lithium business in a couple of years. So from a near-term catalyst standpoint, as I said, the Uzbekistan operations give us that solid base. They're just the foundation which to move. We've got a very active workover program ongoing right now. We're very pleased with the results, and we'll talk about that in a few minutes. But really what it's also done is given us a first mover advantage. There's 282 gas fields in Uzbekistan. We're operating 8 of them. And so the reality is, we feel that we're the first ones there. We're proving the technologies work, that our processes work, and we'll look to expand our position as it's an area that's really looking for investment, foreign direct investment, but more importantly, newer technologies. And so we'll be able to do that. But we also see a lot of exploration opportunities there and even the LNG business. That'll transition over the next couple of years into modular LNG, which realistically is probably on a cash flow basis, 3 to 4 times what the current Uzbek fields can provide. And so we see a real prize in terms of the modular LNG. Now that we have the feed gas supply, we're finalizing contracts with the off-takers, and we expect to get into construction in Q1 next year. These plants only take about 12, 14 months to build, and so it's not a long, drawn-out process. So we'll start that in Q1 2025, and then ultimately that'll lead to the lithium. If this is a one-time and this is a 3 to 4 times in terms of cash flow, the lithium business, even at $20,000 a ton, is really more like a 10-time. And so it really is a prize continuing to pursue. One thing we have, I think, competitive advantages is just our strategic location, being 800 kilometers from China, and yet being able to access the European markets for lithium, I think will be very, very strong as you move forward. And so we've got 1 acreage there right now, and we're currently expanding to really build up that footprint as well. For those of you not familiar with Central Asia, as I said, we've been there now 16 years. We find it very, very safe, very stable operating environment, very safe operating environment. And one of the reasons we feel so comfortable, especially within the Kazakh region, is all the super majors are there. And so the Chevron, the Rio Tintos, Cameco, and with uranium, ExxonMobil, Glencore, Shell, those companies have invested north of $430 billion since Kazakhstan went independent in 1991. And so we really don't see a Russia-Ukraine type of conflict ever evolving in the region, just because of the stability of the super majors. There's just such a big Western interest in the region. Certainly, we've seen Kazakhstan expand in terms of rule of law, just transparency, and they have to. I mean, they had to with these sorts of dollar investments going on. It's a very strategic location to be in place, and we'll talk further about that in a few minutes. Also, just with the transportation route going from China through Kazakhstan across the Caspian Sea into Europe, and that's heavily expanding. The government of Kazakhstan is currently investing billions of dollars to grow that, and so we really see it as a strong area to be working in. A lot of resources, both in Kazakhstan and Uzbekistan. I think Uzbekistan has the world's second largest gold mine. right now, producing 2 million ounces per year. And so very, very resource rich, as is Kazakhstan with its oil, with its gas, and now with its critical minerals. So a lot of activity, a real good solid frontier to be working in. Within our Uzbekistan operations right now, as I mentioned, we're currently producing 8 gas fields. It gives us a very large inventory. We've got over 100 wells to deal with in Western Canada. And the reason Condor's headquartered in Calgary is because it gives us access to all the latest technologies that have been utilized. Within Uzbekistan, 100 wells, if a Canadian operator had that, they'd be very excited from a well inventory standpoint to go forward. And so we've started our workover program now. 7 workovers completed right now. Very pleased with the results as we're bringing larger and larger gas volumes on, and a lot of shut-in wells that we'll be able to work on it as well. One of the reasons we focused on Uzbekistan was the geology is very, very similar to Western Canada. And so we can take those proven technologies that have been proven here and apply them readily into Kazakhstan. And that's exactly what we've been doing. We're in a very good location, surrounded by multi-TCF gas fields. So we know it's a very active hydrocarbon system. Well, it's producing 10,000 BOE a day. We've already flattened the 20% annual decline rate as natural decline. Some parts of the world reservoirs are 15, 20, up to 30%. These were north of 20%, and we've been able to flatten that already as we're continuing to build. Have a multi-well workover program going on right now, introducing Western technologies. One example is called the plunger lift, which helps lift water and gas out of the well bores. The first ones, these are the first time this equipment has been introduced in Central Asia. Very, very standard in Western Canada, and so easy to adapt, and it's working very well. So I'd mentioned 10,000 BOE a day in Q3 with about $19 million of sales. Continuing to ramp up our activities using, as I say, you can see the theme, proven Western technologies. This is currently the service rig we have working right now, compared to what was working in the region just before we took over the operations there. And so it's just bringing in new modern equipment. You can work much quicker. Our workovers are taking us 5 to 7 days. Prior workovers are taking 30 to 35 days. And so there's a huge savings there. We're actually mobilizing a second rig right now just because we're so happy with how the first one's been performing and the results we're seeing. Of these 7 plunger lift systems that we've deployed, 3 have been optimized, and we've seen between a 100 and a 3% increase in flow rates on those wells. And so, you take that sort of percentage and you multiply that by 100 wells, and you'll see a very, very significant increase in production. And it won't work on every one of the wells. I mean, some wells won't, but certainly the initial inventory has all been very positive, and we're keen to move forward with that. Another first technology that we're introducing is called inline field separation, where basically you knock the water out at the field level instead of taking it to your facilities. When you take the water out, it reduces the friction pressure in the pipelines, and so that's less pressure that the reservoir sees. And basically what that allows the reservoir to do is flow faster or flow more. And so this is, again, a proven technology in Western Canada, actually designed by folks here in Calgary. We're literally installing the first one right now, and we look to install over the next 4 or 5 months 13 of these pieces of equipment, because again, they'll also increase the production rates. Got an infill drilling program planned for next year. We didn't need to do infill drilling this year because of picking the low-hanging fruit. All the opportunities that we have with workovers right now, we're going after those to increase production. But certainly next year we see a lot of infill activities. Currently reprocessing 3D seismic data just to bring it up to Western standards to better image the subsurface. And with that, next year we plan to actually start drilling multilateral wells. Again, you can see the same theme, things that have been proven in Western Canada, we're applying them to a region that's never had them before. And that's exactly with multilateral wells. None have ever been drilled in Uzbekistan or Central Asia for that matter. So you really get a sense of this being the foundation for the company moving forward, which it is, and we expect to grow those volumes and the revenues that we're currently seeing there. Moving on to LNG, as I mentioned, we're talking with modular LNG facilities, so these aren't the $5 to $7 billion plants that take 5 to 7 years to make or to construct. We're taking gas, making it really cold, minus 160 degrees, minus 162 degrees Celsius. That allows you to put 600 more times gas in whatever little container you have. And so it really concentrates the gas, and that's where you can get the energy to run locomotives, to run mine haul trucks. CAT has more than 10 million hours on mine haul trucks right now. There's railroads in the United States, Florida East Coast, for instance, running their entire locomotive fleet on LNG. And so the applications that we're using, again, that same theme, been proven in other parts of the world, and we're just bringing them to Central Asia. So with modular LNG, the real advantage is it localizes the production. You can actually produce, you can take your plant anywhere you want because it's not this massive structure. It's actually 8 skids, eight 40-foot skids, and being constructed in Houston, so it'll be easy to transport over. It hits the ground, you plug it in, and you get playing. But importantly to note, we're using again that whole theme of just proven technologies. So it's been done on the locomotives, been done on marine vessels, BC ferries, and off Vancouver, they're running LNG in their vessels, mine haul trucks. So just all sorts of applications there. And really just from a visual standpoint to better understand the reason our timing is so good with LNG right now in Kazakhstan is the huge expansion of what's called the TITR, the Trans-Caspian International Transportation Route. It's been it's literally several $billion being invested in this. The big reason is the traditional northern route, obviously going through Russia, has been hindered with the ongoing activities. The traditional southern route going via sea up through the Suez Canal into the Middle East, well, that's under a lot of conflict right now, a lot of stress. And so the Kazakh government is literally putting billions of dollars into expanding the TITR. They need a way to fuel all that upgrade in equipment. With LNG on a locomotive, we'll be able to go from the Chinese border to the Caspian Sea without having to stop and refuel. And that's not being done right now. It'll also have obviously the additional advantages of lower greenhouse gas emissions up to 30%, lower particle, and you actually get more energy per volume by weight with LNG. And so it's got a real attractiveness to the national railroad system. They'll be able to run their locomotives faster and further on LNG. And so, that project's moving forward right now. We have, as I mentioned, 2 gas allocations. The first plant, a place called Elga, which is very, very near to the National Railroad's main depot. And so that's where the first facility is going. The second one will go close to the Caspian Sea down in this region. And then we'll just continue to expand over the next few years. We really want to target the mining region up in the northern part of the country, the hard rock mining, where you got the 793 mine haul trucks, those 240-ton trucks running up in there. And so we'll be expanding into this region, but also down into the southern part of the country. So we expect at least 6 facilities planted throughout the country. Key to all this was getting 2 natural gas supplies, which we've now done. We're in discussions right now with KTZ, the National Railroad System, and a small company called Wabtec. Wabtec is Westinghouse Air Brakes, so they own the locomotives or build locomotives. A small $28 billion company that's partnered with Condor and with the National Railroad System to develop LNG in there. So we're in very, very good company with that. Planning the first LNG in 2026. And as I'd mentioned, it really addresses the government's critical need to fuel these things. Kazakhstan is actually a net importer of diesel right now, and so this will really help the government out. And we'll do it in a big way. These first 2 natural gas allocations, providing over 1,000 liters a day of diesel, enough to handle 280 locomotives. There's 1,400 locomotives in the country right now, so we're just nailing the tip of the iceberg here, and that's not even starting with the mine haul trucks. And so we really see an opportunity to grow the LNG business in the country. And it really helps the environment. It's the equivalent of taking 38,000 cars off the road per year. So as I mentioned, actually we're in discussions right now with KTZ and with Wabtec, finalizing how much LNG is going to be taking off, where the final locations need to be, because the LNG will be built here or be manufactured here, but we can transport it throughout the country. And then also, where the ultimate scheduling is. And so we're all tied in schedule wise, but the project's really coming together nicely. The third part of the third leg on the stool we have right now, initiative wise, is our lithium licenses. We've got 1 large license right now that we've secured. We're going after a few more within the country. grades are anywhere from 67 milligram per liter up to 130 milligram per liter. The technology is definitely there. It's advancing in terms of how to extract the lithium from the brine. You no longer need the large solar ponds where you let it evaporate over a couple of years, because of the DLE, direct lithium extraction technologies. That's ongoing. There's now over 50 companies that are working on these types of things. North America is really moving fast on this, and we really feel that within Uzbekistan, again, using that same idea or same theme, take those proven technologies, even DLE technologies, and apply those. And so on our roadmap, you would have noticed 2027 is when we're targeting first lithium production. And that's partially based just on getting the right DLE technology developed. We're not going to develop our own technology. We're going to use one that's available. But we can see, the first phase one, the feasibility work we've done right now, 16 development wells, 8 injector wells, gives you about 250,000 barrels a day of brine, and that equates to 20 tons of lithium chloride, lithium hydroxide per day. Multiply that by $20,000 a day. You're starting to see why we're really excited about this business, because it can really expand. Very briefly, we're obviously very, main board listed TSX company, and so strong importance on environment, social, and governance, ESGs. My background prior to Condor was 22 years with Chevron. I've got a number of Chevron colleagues in senior management positions within the company, and so we come from a strong ESG cultured company, applying it to a small company. And the nice thing about that is with small companies is the decision makers around the table, you can move very, very quickly. But, eliminating routine venting, moving forward with DLE, the LNG projects, all huge environmental impact assessment projects that we're working with right now. Social donated over $5 million so far to social programs in Central Asia, and we'll continue doing that. And within governance, chairman of our board right now, ex-Price Waterhouse, very, very strong governance in terms of what we're running and what we're doing. So really, to wrap it up and summarize, 3 prongs or 3 legs on the stool. The first is the gas in Uzbekistan, and we're increasing gas production right now as we move forward there. And so that's a very strong business. The first mover advantage in regions like that is huge. And we really think we'll be able to expand not only in the gas business, but take our lessons from Kazakhstan on LNG, introduce those into Uzbekistan, and a lot of exploration activities also, but really just a huge part of it. And that'll transition and help us move and fund the LNG business as we move with that. First facility there's planned for later in 2026. That then folds into lithium brine in late 2027. And so you can see it's a very strategic, methodical, and thought out process. That's really all I have.
All right. Well, this is already a lot, to be honest, Don. So first off, thank you very much for the very interesting presentation. As always, please feel free to ask your question. This is why we're here. We have a question from Carl first. LNG evaporates quickly and disperses if released. Surely you're aware of greenhouse effect of methane, which is by far outweighing the carbon saving you present. Can you tell us a little more about how exactly you manage either tank cooling or avoiding boil-off losses, climate damage? I mean, those are always intriguing questions because there seems to be always 2 sides of one coin. On one side, the savings, on the other side, the other view. How do you reconcile those 2 points?
Well, the tanking system, the storage system of LNG, it's really good on the shelf for up to 90 days, but you will start to get boil off gas, and initially at your facility, you can recycle that, you can use that. Our expectation is the LNG, because of the high demand, it'll sit in a tank no more than 4 or 5 days. And so we're not going to get into a real strong boil off situation. From a transportation standpoint, it'll be transported on ISO tanks, which are very safe and constructed. I mean, if there ever was an incident, as Carl indicates, the gas will evaporate and it dissipates, and so that's not great for the environment, that single event. But the chances of having these incidents are very, very small. But again, the technology's there. In Western Canada, in the US throughout. I mean, they're running LNG on locomotives and it's passed very stringent environmental regulations. We'll be using a lot of those same regulations in Central Asia.
Exactly,
So
and this is one of the most interesting point I think out of what you're doing out there is obviously in exporting North American or European technology into Uzbekistan or importing it if you're from there. Um, how's the government support in that regard? You're in the part of the world that is right now a bit moving around with everyone trying to find his footing. So can you tell us a bit more about the support from the government that you have, and also what do you see in the region? Is it stable or not? What would you tell shareholders?
sure. Well, this is an excellent example of just government support. There's the president of Uzbekistan, talking to Condor. So we've met with the president, we've met with the prime minister. I've met with the prime minister and the president of Kazakhstan as well. The government's, our project in Kazakhstan, the LNG projects, it has been deemed of national strategic importance because of the need. And so they're very much supported by the governments. We feel the regions are very stable, and that's really through investment, strong foreign direct investment already through the super majors, both in the mining industry and the oil and gas industry. Huge financial institutions, EBRD, $500 million has gone into Uzbekistan so far from EBRD. And so you get, the European Bank of Reconciliation and Development investing in your country. And we think that's a very strong sign in terms of the stability of the region. General Motors has a huge automotive facility in Uzbekistan. Obviously, Kazakhstan, as we talked about before, with all the super majors working there. Again, we think it's an exceptional place to work.
Absolutely. And that being said, as you're defining it, three-leg lithium right now prices are lower, which means that project with a lower cost might be the one that actually go forward and they're looked at. How do you compare into cost versus what is known right now into brines or into hard rocks, and what can we expect on this side?
Well, obviously, I'm a mining engineer by background, obviously, or not obviously, but that's what I was, and so have a pretty good understanding of the hard rock mining world. And the advantage of lithium brine is you can drill a well in 25, 30 days and have that producing and pulling the lithium out of that brine versus the 3 to 4 to 6 year mine construction time to build the mine and start dealing with the ore. The brine systems DLE is revolutionary. Now that we're able to extract either through absorption, ion exchange, there's even cavitation methods now to extract the lithium which is in the water itself from the brines, and so it's going to be, it is already revolutionizing the brine industry in North America. Regions like Kazakhstan and Uzbekistan that are so close to China, who's the largest demand in lithium. That's a huge of strategic importance, but you've also got that route way to Europe because the European markets are looking for lithium. North America's got their lithium supplies now; they're pretty comfortable, but we're hoping to supply both China and Europe with lithium.
Well, that's a good end to it because it's going to make a good transition to our next presentation. But Don, thank you very much for your time. Very interesting company. Obviously, we do like energy plays, and we do like to see them all over the world as the geopolitics are changing on almost on a daily or weekly basis right now. So not only we wish you best of luck, but we will continue following your story at Condor Energies, and we'll be happy to see you again next time with new development.
Thanks for the opportunity, really appreciate it.